Sometimes, starting early isn't enough. I began investing when I was 11, but it took me 8 years to realize I was doing almost everything wrong. Imagine starting young, thinking you're ahead of the game, only to discover you've been running in the wrong direction. The question haunted me. What if everything I believed about investing was just noise? Back then, I followed the crowd. Charts, trends, market timing, I tried it all. It felt clever. It felt exciting. But deep down, I was just hoping lines on a chart could tell the future. I wasn't investing. I was reacting. Then, in 1949, I came across a quiet little book, The Intelligent Investor. It didn't promise riches. It didn't scream for attention. It just made sense. And from that quiet logic, I found the 3 rules that changed my life. Rule number 1. A stock is a piece of a business. Obvious? Maybe. But back then, I didn't see it. I knew ticker symbols like kids knew Pokemon, but I had no idea what any of them did. Stocks weren't businesses to me. They were blips on a screen. I bought flickers, not fundamentals. Then it clicked. Behind every stock is a company with real people, real products, real decisions. If you wouldn't buy the entire business, why buy a sliver of it? Rule number 2. The market is there to serve you, not to instruct you. Meet Mr. Market. He's emotional. One day, he'll overpay for anything. The next, he's practically giving things away. And here's the genius. You don't have to play his game. You can ignore him every single day. Until his mood finally benefits you. Mr. Market doesn't know value. He only knows mood. Use him. Don't follow him. Rule number 3. Always demand a margin of safety. Let's say there's a bridge that holds 10,000 pounds. Your truck weighs 9,800. Do you cross? A smart investor doesn't risk collapse. They walk away or find a stronger bridge. In investing, assume something will go wrong. Buy at a discount to intrinsic value. That's how you survive volatility. These 3 rules, they're not flashy, they don't trend, they're just true. In fact, most people ignore them because they sound boring. But wealth doesn't follow trends, it follows principles. Most of my early mistakes, they came from thinking I was informed. Financial news, stock tips, headlines, they didn't make me smarter. They made me anxious. I thought I was investing. I was just busy. Now let me ask you this. What if you could only make 20 investments in your entire life? That's it. No retries. No second chances. Wouldn't you think harder? Wouldn't you demand more? Now make it harder. You get $1 million. 1 week to invest it in 3 companies. Forever. No selling. No escape. What do? You'd eliminate hype. No memes, no maybes. You'd want durability, an edge, a moat. Think of Coca-Cola. Billions know it. Billions trust it. RC Cola could spend billions, it wouldn't matter. That's brand power. That's mental real estate. That's a moat. And with a great moat, even a mediocre CEO can't ruin it. That's the kind of business you want. So here's what I've learned. You don't need 100 stocks. You don't need constant trades. You don't need to react. You need clarity. You need patience. You need conviction. Because in the end, 5 good decisions can be enough to build a fortune, but only if you think long-term. So here's your final challenge. If you only had 20 investments to make in your lifetime, would you still buy what you're buying now? If not, you don't need new stocks. You need a new mindset. And that's exactly what we teach at Modern Money School. We don't just tell you what to buy, we teach you how to think,